That's about the oldest adage. My famous quote that's been quoted, selling may go away, but no one ever said it's the 1st of May. Sometimes it's in April, sometimes it's late in May, and sometimes it doesn't come whatsoever. But we do know it's more typical to sell in July and go away. But there is mitigating forces that we'll go through today that we'll share with you on normal years. And of course, this is by no chance a normal year. As measured by the way we started things off, right? And of course, the way central banks are, especially Australia, continue to enact quantitative easing. Anyway, this is our Twitter page. We send stuff out. You can always check out the Twitter page or sign up for them. A lot of things that we do is put out some great ideas. And one of the things that we covered in the room the other day was taking advantage of this ETF, the ERY. The inverse ETF, low close doji, and the British pound. And then I want to focus in on VRX and, of course, ABV. And then yesterday, ERY, it actually hit the monthly pivot, and that was a nice little trade there, and telling people, listen, take your profits. And this is the stuff that we had taken care of business in our trading room. But I wanted to follow up, and I wanted you to see that ABV because it's important. As we discussed in our trade room today, and to follow up with that a little bit, because it is a part of the biotech, and it is, believe it or not, a part of everything here. In addition, yesterday, looking at one of the things that we were talking about is this is a doji right there. That's a PPS sell signal, and regardless, this line in the sand, that's about what we're handicapping or anticipating that it might get down to and take about 3 weeks to get down to for Tesla if they miss. And it wasn't really that they missed as much as they, I think, overpromised. Technical indicators suggested Tesla was weakening on that rally, showing bearish momentum. Volume was starting to arc over, and then today we find ourselves trading as low as in the 212 handle on Tesla. These are the kind of analysis techniques that we utilize to help our traders, and I put a lot of this stuff out on Twitter before it happens for 2 reasons. A, to alert people nicely that something's up, and B, we have a lot of people that come into the trading room that can't be there all the time. They may hear what we're talking about, they leave, and I want to follow up so that they know what's going on. I generally don't tweet that I'm sitting on top of a mountain going skiing, or I'm sitting out there drinking a rare bottle of wine. That's a tweet you'll probably never see from me. But more importantly, I generally try to keep it more business orientated, seeing it's a business Twitter account. Fabulous product. The Twitter icon alone's got to be worth more than 14 a share, but that's another topic for another day. So let's begin, shall we? The topic today is handicapping directional trading ideas, what we use, what tools we could have. We do a lot of ongoing segment webinars, and for those that are new, and I was just in Boston last weekend, and surprisingly, a lot of real new traders, I mean just brand new to what's going on. So that's, when I say brand new, people weren't familiar who, I kept referring to TOS and TradeStation. And who's TOS? It was like, well, that's Thinkorswim. And I think it's awesome to see traders that are looking to engage themselves into the market, especially in this environment, looking to get educated first before they just pile in, because this is a very interesting environment we're in. It's definitely a trader's environment. But what I want to mostly point out to you, and before we get started, is let's just take a moment to read this. Trading's risky. Stops don't limit your losses, and please don't reproduce this without letting me know. It would be a nice customary thing. And with that said, for those that aren't familiar with me, and just a quick bit of history here, we wrote a couple books. A lady in Boston actually said, I saw you speak one years ago at a conference, and I thought you were talking about commodities. She didn't know I did stocks because I think we were talking about this book, the Commodity Traders Almanac, which is pretty wild, but it might be hard to see. It talks about the seasonal analysis of futures, Forex, stocks, and ETFs. It's hard to read, but this was a phenomenal book. What I brought to the table in doing this book, and this was by John Wiley and Sons, which was, you know, at the time, granted, not a lot of people were trading soybeans and oats and live cattle, but what we did is we increased the amount of markets like bonds and S&Ps and the NASDAQ and like markets in crude oil and ETFs and individual stocks that track those seasonalities of those underlying markets. We started this project and I think it was 2007. So it was a little bit ahead of its time back in the day. So we really did, when people say, oh, commodities, and the funny thing is when you look at commodities, you consider foreign currency, and as many of you guys know, if you're trading in currency ETFs, you have the FXE, which we really released and let a lot of people know who weren't really aware that actually currencies and each individual currency has their own different makeup. Bonds, the Canadian dollar, Aussie dollar, the British pound, and the euro, of course. And different countries, different currencies have a fiscal year end. Some are very correlated to certain times of the year against the US dollar, and sometimes some aren't. And that's what we covered in that book. So it was really some fabulous information for traders looking for better opportunities. Anyway, so many of you may know that I did the PPS indicator on Thinkorswim. We've got Person's Pivots. It's a specialized indicator that filters pivots out. It's not just regular pivots. We also have the high closed, low closed doji indicators. And so part of my path started with working on the floor back in 1977. So if it's been traded, I've done it. And if there's a way to trade it, then that's what I look for. Options was actually the first time I traded an option was in 1984 when they first introduced options to the Chicago Board of Trade's bonds, the 30-year bond contract. So options has been almost first nature in my trading repertoire for an awful long time. And I'm also a member of APTA, the American Association of Professional Technical Association. So what do I do here? Obviously, we taught individuals and professionals to excel in their trading. We provide advanced trading software. We provide trading indicators. And I use a rule-based trading methodology. A lot of the indicators that we created came and were developed that were written in that book, which came out over a decade ago, and it is in its revision right now, coming out with its second edition. So look for that sometime later this year if all things run smoothly in my writing career, which that's a joke. So how do I do what we do? We have applications with Trading Station with their trading platform. We have an add-on package with many of you have it already between TradeStation and Trade Navigator, Genesis software. And many of you are very big fans of the license study on Thinkorswim platform, which you can find a lot of our past webinars that describe how to use pivots, my pivots especially, with the PPS buy-sell indicator or bullish-bearish momentum indicator. We have private mentoring that we do right here in our office in Florida. We have a semi-annual seminar that we conduct, live trading seminars. Of course, we have online trading courses, a live trading room, which a lot of our ideas come from, and more importantly, what we did to enhance the live trading room, something that I've always done, is get my thoughts and observations down on paper for the week. I run my scans at the end of the week for what I'm looking for, and I'll share some of that with you today, as well as what sectors that I'm looking at and some of the tools that I'm looking at and what I see coming up in the month of May, because we definitely have a tide of changes coming here, as we've noticed in the markets all of a sudden this week. So let me do a little quick house cleaning, and then we'll begin. We have, when I was in Boston, I announced we still had the cruise. This is I don't know how many years we've done cruises. And this one, we're going to the Western Mediterranean cruise. It's in Spain, France, and Italy, and that's June 12th, and it was sold out. So that's done. We have a 3-day trading seminar down here in Palm Beach, Florida in September. If you'd like more information, just reach out to our website, personsplanet.com. Email us, info@personsplanet.com, for more information on when, why, where, what topics, if you're interested in coming down and learning more about what we have to offer. All right, so we got that out of the way. So let's take a look at something here that's, I know a lot of people, and I'm going to refer to Boston because it was the last time I reached out to people, and it was a big investment group. They were very engaging, and I got probably a lot more out of them than they got out of me, believe it or not. And one of the things I got out of is that it was no coincidence that a lot of people were in gold, especially the gold miners. Ironically, this is one that gold typically peaks out, and this year is a lot different. And it's getting a lot of traction because based on central banks leveraging with quantitative easing, with the fear of negative interest rates, a fear of economics, contraction, and of course the Fed, U.S. Federal Reserve raising rates. This has got a lot of people in turmoil. And again, I think the big turmoil is who's going to be the head honcho in the White House next year, right, when we get to elections. So we do see that it's down to now Donald Trump potentially and just Hillary Clinton. So I think a lot of people, or maybe the markets, are a little, handicapping who's going to be in the White House, and what key word here, fiscal, F-I-S-C-A-L, what fiscal policy changes will be about, and also monetary. So monetary, and I can't spell, but monetary controlled by the FOMC. If we get a Republican president in and he doesn't like who's running, the czarships and who's running things, he's going to bring in his own cabinet, obviously. He's going to bring in his own people, and, there's going to be a change of the guard, so to speak. So I think anytime there's an election, you get this cause for concern in the market, and people are absolutely, this year more than ever, flocking to gold because it's counterintuitive to its seasonal trend. Gold, as you can see, this seasonal trend just absolutely pukes, and the best time to buy it usually comes in the beginning of July. Now, this is a historic seasonal trend of gold that dates back since the beginning of gold futures trading history, since like 1974. So this really gets our average, and this is a daily, so it gives you your daily average setup on exact data in gold. As you can see, it really hasn't performed gold futures and gold trading like it should, and so it's counterintuitive to its seasonality. Now, part of my rules that I look at when I'm trading a market on seasonal analysis, I always say that technical analysis supersedes seasonal analysis. What is technical analysis? Price action, price patterns, volume, commitment of traders, who's in the market. These are kind of things I think that are very relevant in helping us get an idea of what the market can do. Now, what I also want to point out to you is I've taken the liberty to share with you guys, for those that are probably not interested in trading gold, we have several ways of trading it. We have, of course, the typical ETF, GLD, which has options. OPT period stands for options, so it's optionable. There's another exchange-traded note, trades just like an ETF. It's DZZ. It's a 2-time short. It does not have options. So if gold goes down, then DZZ is an ETN that you can buy like a stock, and you're looking, if gold goes down, DZZ goes up. It's an inverse 2-time short ETF. Then there's DGLD, 3-time short, but again, it has no options. DGP, no option. UGLD, 3 times, but no options. So these are ETNs that one could take advantage of. They're priced differently, and I just wanted to share with you that if we feel that the market's getting ready to maybe peak out and have one more regression, because quite frankly, after last week's high at 1300, we did see a pullback this week. Now, it's not picture perfect, but typically gold in the month of May does not do well. And then you get maybe a spike, and you can see that it struggles to maintain upside movement. The real key is this is May, and then we're going to be on a cruise, a seminar cruise in June, and then this is July. So maybe you follow and keep an eye that the trend, typically the supply-demand in gold, is not very positive this time of year, and we're going to examine gold in just a moment, but I wanted to share with you the overall seasonal trend of the market and corresponding ETFs if you're not familiar with them. So this is gold. This is not a fresh chart. This is actually from Friday. Friday's trade, this was in our weekly thoughts and observations that we send to our clients. What it basically was looking at is that we had a huge move. We are near a red, that's the monthly pivot resistance. Stochastics, which can stay overbought till, I don't know, I always like to say hell freezes over, but that's, oops, I already said it. But one of the things that I like is a volume tool that specifically shares with me what the accumulation of up moves versus down moves are of the volume, and that's this OBV indicator. And as you can see, that clearly it's not breaking out to the upside with price. So what that tells us is that in a seasonally weak period of time, that the rally that's up is on light volume is probably not sustainable. That was our analysis for this week. In addition, if you take a look at this report at the bottom, this is something that most people have access to. It's called the Commitment of Traders Data, and you will note here it's color-coded. We've got small speculators in green, large speculators in blue, and commercials in red. Now, if you look on it, this is a zero-line histogram. Anything north of the zero line shows that the hedge funds are super long, the public, the small speculators, are super long, and funny thing is that the commercials are the other side of that trade, and they're super short. So it's not perfect, but it definitely gives us an idea that when we see an extreme reading, and by the way, this is an extreme reading, the market is long by the speculators, whether it's a hedge fund or a small speculator in a seasonally weak period of time on poor volume. That is not a great combination from a historic percentage and probability standpoint. It can move up, and what can happen is eventually maybe it consolidates, and guess what? Then volume picks up and then it breaks out. Typically, if gold prices are going to continue to go to the upside, typically we would start to see kind of like a deflation of the hedge funds long and the reduction of the commercials short, like happened over here. So this, when the market was really what we call overbought, note that it just puked and the commercials started to reduce their hedge, and the hedge funds reduced their longs, and then the market started to rally again. So with that said, when we get a market with this type of readings where there's that type of disparity between the speculators and the commercials, it typically, especially on light volume rallies, it typically doesn't end well, right? So I just wanted to point out to you up here, chasing gold, and as much as I know what's in the market right now or in the media is that there's a lot of fund managers saying you got to buy gold. Well, if I was long gold and I wanted to take profits, I'd be telling everyone they need to buy gold. Why? Because I need to sell it to somebody, right? And so I'm not sure listening to the media as much as looking at some of these, what I define as technical conditions. So let's look at these technical conditions one more time. One, this is the person's pivot resistance target. Two, this is volume. That's a technical condition. Three, this is the stochastics reading. Four, This is the supply and demand function trend of the market over time that shows that this is not the strongest time frame of the year to start accumulating gold. And last but not least, this tells us with unequivocal evidence of who's in control of the market. Now, I'm sure the fundamentals of whether it's a conspiracy of manipulating the dollar, and I know everything a gold bull wants to talk about, and that's fine, and I'm sure there are great factors for being in gold. We're near the brink of Armageddon, financial destruction. I know, my emails are full of that. They remind me of that every single day. But over time, year in and year out, when I get all of these types of combinations, typically it alludes to the fact that we're going to see a pullback. Now, ironically, going into the next, all right, so again, this is a weekly bar, and this is actually quarterly, quarterly. These are the quarterly pivots. And one of the things that I see is that, you know, the market could have a pullback here. I know I just don't want to buy the market at this reactionary high. So what's the difference between gold and GDX? Well, gold, if it maintains its value, then gold miners still make money as long as there's demand for gold. And if gold demand dries up, then guess what? Miners aren't going to be making as much profit. Now, I wanted to look at the seasonality with GDX and come down and share with you guys what's really coming down the pike here, because this is something that's very interesting. So if you take a look at the calendar here, this is May, and May typically we see a spike and it starts to chop around and then it peaks out. So this month, the month of May, at least for the next 30 days, you want to be very careful of owning some of these gold miners. While they might be looking attractive, notice that it has kind of like a topping pattern, and the best time to buy it is not in July like gold. The best time to buy it is actually the first week of August. So gold bottoms out, then GDX follows suit, miners follow suit. So if gold peaks out first, the miners peak out second. If gold bottoms first, the miners do what? Bottom second. So that is something that I think is very important, that there could be, listen carefully, a decoupling effect between what gold prices do and a lag time to GDX. So there are several ways to trade GDX. You have the exchange traded fund, and that's what we're talking about here. GDX is the exchange traded fund on gold miners. You have Nugget. Many of you are quite familiar with Nugget. It's a 3-time long ETF, and it is optionable. Dust is a 3-time short. It is optionable. This hardly has any value, only because look where gold is, right? It's a cheap ETF at this point in time. And then there's JNUG. What's JNUG? It's the juniors. That's why I have it in triple start. It's the junior gold miners 3-time ETF and leverage ETF, and it does have options, right? So what my point is that we might develop a strategy around the fact that if a lot of folks, and according to the Commitment of Traders report, speculators are long, and we can take a look at this segment of the market. One of the things that we looked at with gold GDX and for this week, and I wanted to share this with you, and just so that you know, this is kind of the stuff that I put out this week. We saw this is, again, in content for coming in this week, right? So everyone got this Sunday. It's not going to help you today, but just to kind of take a look at certain things. If we're looking for GDX, which rallied about 14% last week, and that's a big move in a short period of time, we're looking for gold to reverse back to the 1250-75 range. We're looking at this to be a credit call spread on any further upside into next week, which was, of course, Monday morning, right? We had quarterly pivot resistance at 26.95 in the GDX. Kind of funny, 51.7%, 52-week historic volatility. So it suggests premiums are getting pretty rich. Bid-ask commanded a higher premium and the volatility expanded. Many of you are option aficionados and you are probably well aware of this already, but for those that are new or just looking at it, this kind of gives us an idea what would be a better strategy if we're just looking for a short-term pullback. If gold GDX goes in a choppy kind of consolidation, overbuy, goes back, what would be on rallies in a high implied volatility environment? Would you want to buy out of the money puts or just sell some out of the money call spreads? We came up with the conclusion of selling some out of the money call spreads. Now, what was also interesting is on Friday, the June expiration, something I generally don't like to get that much time, 48 days till expiration, DTE. We had some decent premiums. Volume on Friday alone, one day, a trader put on 25,000 trades, 25,000 volume on the 27th strike just Friday alone. So this is the kind of stuff that we look at when we look at seasonal analysis, and I take a look at the market, and I look at the conditions of the market based on specific technical tools. Now, I didn't look at MACD. We didn't look at specific moving averages. We have specific indicators that help us to define who's in the market, what the condition of that rally is, and that helps us to get an idea using seasonal analysis to define trades a little bit better. So I'd like to just share, this is the Word doc, just so that you know, but this is actually, if you look here, created on 4/29, modified last at 4:30, that was Saturday. This actually went out Saturday to all my clients. We got a day early because, as I said, I was in Boston. So this is the kind of work, like I said, that's the gold chart, that's exactly what was in the report, and this is the exact analysis that was in that report that everyone we sent to. So I just wanted to let you know, if you're new, I know a lot of people, some of you know me, you know my word's true, some of you guys are new, you know, you don't know me from Adam from Apple, and I get that. So I just wanted to share with you the kind of analysis that I think we need to start to look at, because this style of analysis, some of you have seen me all year long, and I've come in every month, month in, month out, and I do what we call customer appreciation webinars. And partly we follow up with what's happening in the market, and this helps our traders, investors. We have a lot of people using our indicators on Thinkorswim who really appreciate the follow-up teachings, and I think that's part of the whole feedback thing, and to see people do a little bit better. With that said, a lot of the things that we've done this year have been just dead spot on, and a lot of people find this to be a very trying year. And with that said, this probably was one of the biggest culprits. How many people thought crude oil was going to $20? I mean, you couldn't find. Now, even I did a customer appreciation webinar, and it was trading, I think crude was trading around 35, and I did this in January. And I said, you know, the shot of us going to 45 before we see, I think I even said 25, there's an easier shot, and I was wrong on that, because it did trade lower even further. But typically the seasonal analysis and what we look for, the best time of the year to buy crude oil is when pretty much everyone and their brothers and sisters said sell it, because here's the thing, and we wrote a lot about this, and we had some great setups in this, with great trades in here, Murphy Oil, Marathon Oil, the list goes on and on and on. One of the things that was spectacular and very powerful is that if student body left, everyone's short and no one wants to get in it. When you get a rip, it's powerful. All right, so where are we right now? Well, this is May, and we've got a wildfire up in Canada, and they're blaming strength in the market. And what I wanted to point out to you, crude oil actually, just like gold, this is very ironic, has almost a very similar pattern of choppiness, and it's going to remain choppy in crude oil until we typically start to peak out when? The end of the summer, after driving season's over. And then the last gasp rally is generally in September as we conclude hurricane season, so there's no more, interruptus from Mother Nature. That's the typical pattern that we've seen. And ways that you can trade that, many of you are already on top of UWTI. It's a three times long ETF. It's not optionable. One of the trades that we were looking at this week was we weren't looking, we actually traded it. It was a beautiful trade, short-term trade in nature, and that's one that I tweeted out. It was actually like an overnight trade and a scale out. It was just textbook. But you have a 3-time long ETF. It trades off of the XLE or the oil stocks. It's not against oil itself. But let's face it, if oil goes down, oil stocks are going down. If oil goes up, then oil stocks are going up typically. So the ERX, these are your two choices that you could look at for moving forward in a volatile time period to start planning ahead. I think that this current month of May, we're going to start to see, at the very least, what I'm handicapping the market for is this. We could see two-sided trading. We see typical times when markets go from a strong trend up. What do? They go through periods of consolidation, right? And either we're going to resume the trend or we're going to reverse the trend. As you can see with the typical seasonal supply and demand, it starts to get a little bit choppy and what I call chewy. It starts to grind people. One day you think it's going to go down and it pops back up. So the point is, this is a short-term trader's environment here, and I think while the market's going to, if we do see some violent swings, let's say crude oil stays in a range between 42 and 46 or 40 and 45, something of that magnitude, then using the 3-time ETFs, the ERX and ERY, is going to suit you for maybe overnight swing trading, because that really is something that we are seeing. Rather than trading futures, you can have a little bit more staying power, stability, and hold positions for an overnight or two trade. And that, I think, is something that's fairly reasonable for any trader to discover these two ETFs, especially since they are optionable if you're not familiar with those. Okay? So I just wanted to make sure that you were aware of that. In addition, here is what we look at right here, XOP. It's a subsector of the energy. You have two, OIH and XOP. XOP's gotten a lot of strength this year, okay? And here's what I'm looking at, all right? We see a strong move that goes into May. We see a pullback, and then the market comes up and down. What does that indicate to you? It starts to show a trend and then consolidation. So breakdowns on the XOP, and we just saw that this week, right? I mean, XOP just really did see a nice little pullback. We'll share that with you. Let's get into that right now. I'm actually running some live scans, but let's take a look at this. So this is the XOP, folks, and quite frankly, since the market started to base out, this was a hell of a move to the upside. Now this is a daily chart. I'm going to switch this over to you for a weekly chart. So ironically, what we're looking at is a weekly chart with the person's pivots. This is a PPS buy signal. These are color-coded candles. Any event, what we are looking at, that is a pretty significant trend. And all of a sudden the market rallies up here, it pulls back down here. This market trading on a weekly basis is actually conforming to its current seasonal trend. So I expect the market to chop around, pull back some more. What that means to me is as long as it kind of holds its value in this trading range, then going into June, this has a strong weight to the S&P 500. So that's important. There's several sectors that still remain strong going into the June and July time period. If that's the case, and we start to see markets stabilize, that means the overall S&P, while we might see some more short-term decline, typically could lift the market to test the highs one more time. So while everyone now, not 2 weeks ago, is saying get out of stocks and sell them, there's a strong chance, based on the seasonality and the fact that some of these segments of the markets are staying in sync with their seasonality, we will see the market try to go back up one more time, the market being the S&P 500, and retest those highs. So that I wanted to point out to you, there is a strong potential for a reversion to the mean or a test one more time in the markets. Now, what are the other tools that I utilize to examine that? And some of these tools, of course, we look at volume and we look at breadth and things of that nature. And many of you are already looking at this index right here, the NYSE. Many folks look at the New York Stock Exchange, and you look at the breadth by the what? Either McClellan Oscillator, the ARMS Index, you look at the TRIN, you also probably look at the Advanced Decline Cumulative Ratio line. Now, this NYSE, many of you are probably not even trading this. I mean, let's face it, you're in the IWM, the RUT, the Qs, you're in the spiders, you're in the diamonds, you're not really trading the New York Stock Exchange Composite Index. It's a broad-based index. It does give us an idea of what's happening in the markets. That's a fact. It has over 60% of the stocks contained in this index are interest rate sensitive stocks. Preferred stocks, bond funds, and REITs, real estate investment trusts. Just to tell you what's contained in here. So when you see Facebook and Amazon and Microsoft and Google and Apple, you know, those actually weigh in on the NASDAQ 100. And the NASDAQ 100, ironically, doesn't have a lot of or any energy stocks. Basically, it's technology. Basically, it's biotech with a few other retail components like Starbucks, Costco, Tractor Supply, Whole Foods, things of that nature. Okay? Now, why do I bring this to your attention? Because looking at the market, notice that we didn't really take out the highs. We didn't take out this high. We tried. But note what did take out the highs. The breadth of the market. So more stocks accumulated to the upside on this little move and are just now pulling back. So typically, if everyone's getting bearish the market, what I would like to see is if it's going to go down, it probably should go down with the same strength it went up. The majority of the stocks that went up should start to come down. So the breadth does not right now appear to be as dire and bearish as we should be throwing the baby in the bathwater out the window quite yet. All right? Now, does that mean that we can't pull back just a little bit more? We got the unenjoyment report out tomorrow. We have this shelf of this base that we had over here. And what I was telling people this morning in our weekly trade station Thursday briefing is, if we take a look at view data window, it's really up to this day right here. It is the April 12th, I believe that was, April 12th. So the April 12th low, that market, that's kind of like the line in the sand right here that I think a lot of, and I can't draw a straight line with this drawing tool, so please forgive me. But it's the April 12th. I just want you guys to see it. Go check it out for yourself. As long as the market, if it does go down heavy, what we want to see is that the breadth of the market still stays positive, doesn't take out that level, right? And I think we've got a strong shot, a very strong shot of testing the highs. Now, here's the key. Define testing the highs, Mr. Person. All right? So I didn't say take out the highs. I said test the highs. Are we going to test the highs from today's lows, this week's lows, or further lows? That's what I don't know. So, but from that level, I am looking for a reversal, because when this little pullback ends, we should see one more test of the highs. What the strength of that move is depends on if we get a further upside in the accumulation and if it's on decent volume. So at this point in time, I've got to say, based on, and these are the strategies and levels in which I wanted to share with you guys, because it's kind of important analysis. This is the stuff that's kept us making money this year, okay? And if what's really ruling the roost is a lot of energy stocks, as long as they don't crash, right? As long as the energy sector doesn't crash quite yet, then the S&Ps have a shot, and the markets have a shot of at least dissipating on that pullback and then re-challenging the highs. What I think we might see is some of the other segments of the market. And crude oil, of course, this is something that you guys all probably are quite aware of. The ETF is USO. You have UWTI, it's a 3-time long, no options. ERX, ERY, we already went over that. Just to re-emphasize to you guys is how you can kind of pay attention to that. If those markets still look healthy, the crude oil looks healthy, if of course the XOP doesn't collapse, then it remains, it holds its value. It's not going to drag the S&Ps much further. But here, this is what's interesting. And this is where we tie it in with the tweet I showed you with that one stock called ABV, A-B-B-V, right? ABV, if we start to see over the next couple days more and more of these biotech stocks stop declining, generate maybe a PPS buy signal, for example, then we might have a shot at watching the biotech sector, which typically peaks out in April. It has a little mini puke, and then what does it do? It kind of tries to rally. It doesn't really base out until we get into June, but it starts to nibble at the lows and forms almost a seasonal low. So it starts to nibble at the lows in here, and that might offer some short-term support in the market. What does that translate to? A muted upside move in IBB, and ways to trade that, of course, is IBB, XBI. Don't confuse it with XLI. So if you have an eyesight problem, make sure that you put your reading glasses on. XLI is the industrial sector ETF. XBI is the biotech. Now, there's a couple ways that you could trade this as well if you're interested. LABD, it's a 3-time ETF, does not have options. LABU, it's a 3-time ETF. Again, it does not have options. Okay? So that is something that I just wanted to say. If we start to see some upside, putting this together is real simple. You're looking at the IBB, you're looking at the XBB, and if you got kind of like a daily buy signal, what's a daily buy signal come from? PPS, right? And that PPS buy signal, you might get a 1 or 2 day upside because the roadmap of seasonality suggests that we do see some upside coming in the market in IBB. So that, I think, is one of the things that's kind of important that we can follow. Chart is right out of the weekly thoughts and observations, our analysis. What does it share with you? First and foremost, it shares that, you know, the pivot analysis is still in a for the month, while granted it's showing a contraction of the high and a contraction of the low. It's still showing that the market itself is still in an uptrend. We haven't formed you know, a consolidation like we did back over last year. Typically markets go what? They go in a trend and then they consolidate. So if they are consolidating, then we should at least get some technical clues that the market's peaked out. Pivots, the person's pivots that is identifying that the month of May, the market is still not bearish. That's number one. Number two, note that we have our breadth analysis, advanced decline on the S&P 500. Oh, that's pretty snazzy. So we can measure the advancers and on a cumulative basis versus the decliners in the S&P 500 and relative to that stock specifically in that index. And it still shows that we made what? Higher highs and higher lows in the amount of stocks that accumulated. So it hasn't shown that we've broken and started to melt down, right? So that it definitely confirms that a top is in place. We don't have that information. The volume also confirms higher highs and higher lows still. One thing that many of you might and already have access to is this guy right here. It's called the McClellan oscillator. And it unfortunately does kind of show a little bit of peaking out. By the way, this chart was done on Saturday, and this is a part of what I send out to my clients and let them know. This is the technical information, not my opinion, not based on, a reading of who's running in the primaries. This is based off of pure technical analysis. What's nice about this is that the person's pivots has to do with last month's price action. This has to do with market participation. This has to do with participation as it relates to volume. This is the McClellan oscillator is based over a period of time and a moving average component of the advancers versus decliners. But this has to do with the what? New York Stock Exchange Composite Index, the NYSE. Why do I use it? Because it still hasn't quite taken out the low. We are maybe identifying a little pause, a shift, a tide of turning. And with tides of turning, generally speaking, we should get one more pop to the upside. The question is, from where? Tomorrow we have an unemployment report. Is it going to be enough to really get the market moving? Maybe not. Next week we have more earnings. Saturday is the Kentucky Derby. Now, I'm not saying the Kentucky Derby is a big thing, and it's definitely not a market mover. And if you're not familiar with, I'm looking at more spirit to win, but little things, of course, there could be Nyquist is another one, so if you're interested in the Derby. A lot of things going on, but in the month of May, we have that tide of change, and I think as we get moving into next week's further economic numbers and the week after, people start to look at the month, the weather changes, people go out. Another segment of the market that hasn't seen any respect whatsoever is consumer discretionary spending. Department stores, apparel stores, nothing is going. It's about as ugly as could be. And you know what? When the sun comes out and the people go out and then they look at maybe they need to get into new clothes and Johnny graduates unless he's going to get hand-me-downs from 8th grade, we start to see consumers spend just a tad because we do outgrow clothes and things of that nature. I wanted to share with you this particular email because this is actually probably one of the coolest things. It is awesome that I have received in a long time from an individual trader. This is someone who had attended our webinar many weeks ago, and we did the one with the seasonality on toss. And as you can see, this was sent on April 27th last week. And it was kind of interesting because he, thanked us for, of course, the webinar and toss on season. He uses the PPS signals and person's pivots and helped guide his trading. So the newsletter is something that he's been utilizing. So what I wanted to say was this is pretty cool. Thank you for helping me become a better trader. I didn't ask him for this. He just sent it in. But here's what the guy did. He sent charts. And I wanted to share these charts with you because they're pretty damn cool, right? So the fact is that you guys have the capability of using good tools and identifying things on your own. So look at what he said. Plan. Just learned about the PPS buy signal. He just learned about it, right? Entered at the 50-day, ... This is Jazz. Jazz was one of our picks in our weekly thoughts and observations. That's the PPS on Jazz. And of course, not a bad little run to the upside. He also probably looked at the seasonality tool and noted that the seasonality at that point in time moving forward looks good, accumulation on volume, and A-OK on that trade. So the fact is that I think this was pretty cool, and this is one that he did on front line. This was not one of our picks, but we were, at least in the energy space, this is one that I think OBV trending, seasonality goods, looks like a HCD on the weekly, and he was right. And so successful test, industry group strong, OBV trending up, and it had some decent seasonality. So I find the gentleman did a really pretty good line. Gilead Science, this was in the enter the 94 handle. He took half off, one of what we like to use a term called scale out. And that's my methodology. I like to teach people take half off and then let the balance ride. And what the irony is that this gentleman had, really did a great plan looking at the buy signal here, but mainly the entered the high closed doji. So what's funny is he said he risked too much of his portfolio on a trade and took too long to move, so he sold everything at 97.60. Well, you know what? God bless him, and that's okay. But you know what I love about this? I risked too much of my portfolio on a trade. Now, folks, that is a powerful statement. And why is that powerful? Is because that's what happens. When you have too much at stake, you tend to do what? Get out quicker than letting things ride versus trusting the system and the methodology on the HCD methods, right? But either way, the fact that he's learning to go with trend, with seasonality, with a lot of the almost everything entirely that we teach is fabulous. Of course, the stock went on as a high of 103 subsequently. Not a big deal, right? And I bet he's glad he's out because it's down below that level. This is, I don't even know who this is, Tinkham Steel. I scaled out a stock as John on Twitter was advising scaling out on other steel stocks. So we were actually looking at Zeus, AK Steel, other at the time, but still either or. Although he liked steel stocks mentioned in my newsletter, he picked this steel stock, plus he read the letter too late. Now, that is kind of brutally honest. You got to love this guy, right? He does his plan, he looks at it himself, he takes responsibility for his trades, but he's making money with it. And that's what's kind of impressive. And all of that, I want to say to you guys, is something that we have. If you have ever been around to me, you've seen this, you've done the weekly planning and scanning, maybe you've come to our trading room, which has really been instrumental in doing a lot of more stock trading than day trading. Something that's fabulous. If you're interested in trying this, planning and scanning, the weekly analysis, you get your written report emailed on Sundays. It's $49 a month. We cover a lot of sector ETFs. If you're interested, you can also get a copy of last week's, still kind of applicable to the markets, some neat stuff. For those using TOS, you'll also have access to the video lessons, how to set up the PPS and person's pivots, how to select scans, and how to use the scans to spot sectors and these wide buying opportunities, and also the do's and don'ts of utilizing other indicators. So I just wanted to say, this actual market environment that we are in right now comes with a lot of different sea of tide changes. Many of you have seen this platform before. This is my TradeStation. This is the Pro package that we have on TradeStation. And what we look at, and I wanted to share this with you because it's pretty intriguing. This is the long-term monthly pivots. Notice that everything here is, a lot of stuff is blue. There's only one green, and that column right there says support. And that green is IYT. This green is XRT. On a monthly pivot analysis, only two sectors are already near or at monthly pivot. The majority of sectors are in no man's land. They're either between the support or between the pivot resistance. Note that if it's blue, they're at the pivot, which is the typical price. The majority of sectors are like at their monthly pivot. So they're not really at an extreme. They're not really at an extreme buy or an extreme sell. They could flip either way. Ironically, a lot of them are still trading right at what? Quarterly pivot. So we're not really one way or another at an extreme level in accordance with our pivot analysis. As an example, let's take XLV. So this is XLV, right? And so here are the actual, just to share with you, this is the targeted pivot levels on person's pivots for the month. This is the extreme person's pivot monthly. That blue is the pivot point, and this is the resistance. Man, XLV is almost dead smack in the middle. It's not at an area that we are at an oversold level that we would look for buying, and this, considering this is the beginning first week of the month, XLV, if XLV happens to see a bounce off of that pivot level, the blue, and we get a buy signal somewhere over the next couple days, I mean, just fill in the blank. I'm not saying it can happen, but I mean, it wouldn't be something I would rule out to come back, at least for XLV, to maybe test the highs somewhere up in that zone. That's a very strong possibility. Now, I'm not catching this falling knife, not with your money and not with my money. What I would be waiting for is the market to bounce and look for a buy signal, either a breakout of this downtrend or a close above those moving averages. This is a small little downtrend. So this is also XLV, a sector drug stocks that actually sees seasonal strength in the month of May, which is interesting, just like the biotech. So let's take a look at the IBB, and we'll wrap this up so we can get to Margaritaville. Okay, now IBB is actually getting close to monthly support. Today we formed a doji. So ironically, IBB could see, and we could see a launch to the upside and just come back and test those highs at around, maybe we get back to 278, 279, hike, something like that. And that's something that is very possible. And that would do what to the overall indexes? Probably lift them up, especially if energy doesn't go down. If energy stays the same, you get a small lift off in biotech, it could lift, and that would be the catalyst, could be the catalyst to launch the S&P. So if you're trading spiders, if you're trading any product, you want to stay focused on the IBB over the next couple days. That doji right there we close over today's high, could give us a nice little setup on a buy signal, and then of course we'll kind of like keep our eyes on it, so to speak, and I think that could be something that would challenge the market one more time. After that, all bets are off. But I just wanted to share with you what's kind of working in the market, what's ruling the roost, and besides looking at the regular cast of characters like MSFT. Let's look at Microsoft. I mean, formed a doji today. Take a look at Goog. Not Google, just Goog. Now, Goog formed an interesting pattern, by the way, guys, ladies and gentlemen, today. And I'm sure many of you will know what it is. It's actually a high close doji. That candle's orange and a PPS buy signal. Ironic that Google formed a buy signal and was up today when everything was slammed. I don't know about you, but that's a little bit weird, right? So as we get into, and this is Facebook, not giving it up. So as we get into, and of course there's APL. Let's get into Apple real quick and take a look there. Apple's cyclically. I think Apple has the capacity, and I think we're more looking for Apple down here. This Apple is got it's got a bad core, no pun intended. Apple, to me, just from a standpoint as a trader, you have this low, you have that low, and if you think I mean, to me, I think they want to probably press that market and just dig in that one more time. That's how Apple looks to me, by the way, side note. But I don't think the market can come back up and test their highs without Apple. That train ride could go. What we need to see possibly is the XRT recover just a bit, and XRT is just been beaten to the dickens with the ugly stick. It happens to be right at monthly support as of today. So we do have some factors that could launch the market back up, and anytime a market peaks out, typically it tests those highs one more time. So this is kind of what we're looking at. This is what we got to go through each and every single week, and some of this stuff, as we point out in our analysis, like the Qs. What level? This is what we're kind of looking, and not that I like to diss Fibonacci. I mean, ironically, the Qs coming into a strong what we call confluence of pivots on various time frames and Fibonacci support, almost that 50% retrace there. You know, breadth, stochastics, volume. Not just looking at price-based indicators, but looking at market condition indicators. This is the kind of stuff that we go through that helps us with our trades and selects what we're in. So anyway, I wanted to go through today, Cinco de Mayo. I wanted to share with you guys what it looks like for the month of May, and also how we instruct people and help them. If you have an interest in learning a little bit more, if you think that this is something for you, click on that link right there, spend 50 bucks. I think it'll be your best served 50 bucks you've spent in a long time. It'll take you to this link right here. It's better than buying a margarita with guacamole and dip and an enchilada, because this really is the whole enchilada. You get this every Saturday or Sunday, excuse me. Not going to get it this Saturday, it's Derby. And by the way, just so that you know, that we do throw a little fun in there. It's not that these are my picks for the. I got Nyquist to win, Destin to place, and Mana Moyhaman to show. I got a side bet that More Spirit wins. Those are my bets right there for the Derby this year. Just in case anyone wants, we did throw that in the this week's planning and standing. So, any event, John K. already did his Cinco de Mayo at Taco Bell, and this is where you could, you know, the quarterly report also on. You can watch that video, and I really think that this is something, as I get feedback, has really been instrumental to helping people. So if you're interested, take it upon yourself. This would be a great thing for you. No doubt about it. It seems to be very helpful for other students as well. So with that said, I'll let you guys go. Have a great weekend and a Derby. With that said, until we meet again, thank you very much. You can place your order by clicking up on that link or going to the link I've just put in the room. Thanks, everybody. Have a great and good luck tomorrow on the monthly unemployment report.